All right. Welcome to the All In Podcast. Mark Neely, your host, and it's where we talk about what it means to be all in different areas of your life. Today, we've got a super duper special guest. I have known this guy for a little while, but we have become fast friends and business partners in a couple things, and I am super duper excited to announce that we have Tyler Cauble here. Now, Tyler went to Montgomery Bell Academy. He was raised here in Nashville, just like me. First ever project he did was 42 units in about 2015 in Bellevue, and he's a young guy. He's also a member of, or received the Nashville Business Journal 30 Under 30. He founded the Cauble Group in 2018, where they focus on leasing and selling retail, office, industrial, and multifamily real estate. Hamilton Development in 2020. And then also his property management company, Parasol, which manages over 2.1 million square feet of square footage and commercial space in Nashville and Chattanooga. And their company, they're committed to helping business owners understand the market for business growth and Nashville's future. He's also got a book that he wrote called Open for Business. It's the Insider's Guide for Leasing, the Insider's Guide to Leasing Commercial Real Estate. Tyler also writes for Bigger Pockets. You guys probably watch Brandon. It's the Bearded Crew, right? And he writes content and teaches courses for Bigger Pockets. He's a great friend. I trust him implicitly. One of those people that really stands out as someone that you're truly thankful to meet in your life. And you really can't bring up, honestly, commercial development in Nashville and really soon to be, I guess, Chattanooga. Without bringing up Tyler's name, everyone will know him. So Tyler, thank you for coming.
Yeah, Mark, that was quite the introduction. Thanks for doing that. I'm excited to be here. And one funny point on the bearded thing with Bigger Pockets. A lot of people don't know this. I was hanging out with Brandon in Whistler, Canada, back in like 2015, 2016. And we were kind of brainstorming marketing ideas. And he was like, "You should call yourself the Bearded Broker." And I was like, the Bearded Broker. I thought about it, but I was like, man, if I ever shave the beard, which is highly unlikely, if I ever shave the beard, then I'm going to have to completely rebrand. And when I said that, he was like, cool, I'll just take it. And so that's how he became Beardy Brandon. Yeah.
Oh, wow.
Yeah.
How about that? You learn something new every day. Yeah, you'd be like Tom Selleck without the stats. Right. Like, who is that guy? Who is that guy? So, for a few people out there that may not be familiar with you, why don't you tell us a little bit about kind of how you got started and, kind of where you're at now. I know it's a long story, but, you take as much time as you need.
Yeah. So right out of high school, I got into sales. I actually sold Cutco knives. And that summer ended up being one of the top sales reps in the Eastern region, the number one sales rep in the Eastern region. And that was when I kind of realized, like, okay, I can do sales. I really like this. Made 30 grand that summer, and which is a ton of money for a 19-year-old going to college. Yeah. I mean, I felt like I was on top of the world. Bought a motorcycle, I was buying everybody drinks at the bar, just being not very smart with that money. And I was sitting in class one day, and I was fortunate enough to go to MBA, as you said, which is a very, very good private school, and had a strong education. And I was taking classes at UT that I had taken in 8th grade and couldn't understand why I was spending that much money to be in college, and didn't really like it. And, UT's football team at the time was pretty bad, not like they are this year. And my fraternity got kicked off campus, and I didn't really like Knoxville because it was kind of a concrete jungle. So I was like, what am I even doing here? And I annualized my income over 3 months. I made 30 grand over a 1-year period. That'd be $120,000. So I made the decision then to just drop out and move back to Nashville and start working. So started off as a project manager for my grandfather's construction company. Was originally going to take that over. I've been working for him just about every summer since I was 12. And 3 months into that, I got a job offer from a boutique developer here in town that I had sold Cutco to, that heard I was back in the area. And he wanted me to come work on his portfolio of investments. So he had a shopping center, office building, and some industrial as well. This was back in 2013. The market was very different, right? I mean, these were nice assets that were sitting 70% occupied, which, if you know anything about commercial real estate, that's not good. And I came in and leased those up in about 2 years and got into development. And, we've been off to the races ever since. I was there for about 4.5 years. As you said, put together that 42 unit townhome development down in Bellevue. and shortly thereafter left and started my own firms. So we've been vertically integrating and running with our own projects ever since.
I think it's great that you had, you're selling the Cutco, and somehow that really leads into, a guy who you sold it to brings you on board and says, so you must have made some sort of impression when you're selling his steak knives.
Yeah,
I mean,
yeah.
obviously he knew what you were kind of up to at the moment and probably said, this guy's a hard worker. I mean, he's going to put hard work into whatever he does.
I was very fortunate because Cutco sells itself.
Yeah.
Right. But I was able to really hone in my sales skills there. And I just realized how much I loved it. So, and that's also a testament too, that you never know what interaction you have at any point in your life is going to lead to something that could change things.
Yeah. Oh, there's no doubt. So, I mean, would you say you sort of stumbled into it? But I guess with your grandfather, it was kind of almost like a natural thing with commercial real estate, right? I mean,
Yeah.
Had he been in something else, perhaps granddad, you follow a little bit in that, but with him being, it seemed like a natural fit. Look, I don't know that I knew that about you, that with the summers when you were 12 and all that, that's a huge thing to be able to, and plus you get to be with granddad, right?
Oh, it was great. I mean, I've got a great relationship with my grandfather to this day because of that. He basically.
Is your mom's dad?
Yes.
Yeah. I've met him.
Yep. Mom's dad.
Great guy.
Yeah. Great guy. And he taught me how to work. And it was the best thing that ever happened to me because, I've got a work ethic that a lot of my peers don't have. And, you grow up working as a general laborer, because when you're 12, 13, 14, 15, I mean, you can't be using nail guns and doing all the fun stuff. They would give me a sledgehammer and tell me to demo out the bathrooms and all that kind of stuff. And it's a lot of fun. I really enjoyed that. But you learn very quickly, like, okay, I need to find something to work with my brain and not with my body because this will beat you up after a little bit.
I mean, sales skill is important, right? I mean, how do you feel like that really Cutco, what you took that into? Like some people may not think there's any connection there whatsoever.
Sure.
I mean, but talk about that a little bit. Like there had to be some sort of, what did you take from your sales experience, as short as it was, but clearly you were doing well. Sometimes we just segue into something else, but like, how did that play out? What kind of skills do you use now or, from that?
Yeah, I think the biggest takeaway, you're walking into a stranger's home and trying to sell them a $2,000 knife set. Right. So, I mean, that's about as trial by fire as you can get when it comes to sales. I mean,
clearly I need to find out more about knives. I didn't realize they were expensive. So even better.
Yeah, that's right.
Worth.
Yeah. I mean, I think my average sale was like it was about $1,000. So I knew that every appointment I would walk into, and my sales ratio was really high. So I had a chance of making about $500 every appointment that I did. So that's pretty incentivizing as, again, a 19-year-old wanting to go out there and make some money for the summer. So, again, building that rapport with somebody that you've never met, you're in their home. It can be a relatively uncomfortable situation at first. That carries over into everything that you do. I can sit down and connect with just about anybody relatively quickly. And, at one point, I mean, I did 50 appointments in my first 10 days.
Oof.
50, it was like 51, which is a ton, right? I mean, I think I broke the record for the most appointments done in the first 10 days. But I was fortunate enough because of how many appointments I was able to keep setting up that I could kind of test things, right? And so I got to a point where I wouldn't even mention the knives when I would walk in. I would just sit there and see how long I could talk with my clients about their family, about what they enjoy doing, about their lifestyle until they brought it up.
Yeah.
So that I could sit there and just build that rapport and build that connection with them so that I'm not just some stranger trying to sell knives, right? I become somewhat of a friend. Yeah. And I think that translates into any business, no matter what you're selling.
I mean, it's so true. I mean, it's relationships. I mean, we
100%.
Can be walking down the street and somebody will invariably flag me down. And it's like, oh, I know that, I know him from so-and-so. And it's just really, I mean, it could be somebody from years ago that you sold a set of knives to, or, whatever you're doing. And you never know when this person's going to cross your path again.
That's right.
And I think that's a kind of, burning bridges. That's a thing that I think is just a bad idea all the way around, no matter what goes on in whatever situation, whether it's a breakup or a business breakup or just you're parting ways, I think it's always best to, because you never know when you're going to come back around, and it's just maybe
Yeah.
that one circumstance. And
And Nashville's a small town,
yeah,
right?
yeah,
I mean, it's growing big, but
yeah,
it's still a small town. Everybody
yeah,
knows everything that's going on
yeah,
here.
yeah. It's so true. I mean, you have to really, I think, protect your relationships. And but so what would you say is the hardest part about what you do now?
Oh, the hardest part about what I do now. So, I am a creative developer. A lot of what we do is very different from what your traditional developers do, right? I mean, I've got a beard, I'm covered in tattoos, I don't wear collared shirts, right? It's just not something that I want to do. We take a very different approach to our projects, and so there's inherently challenges with that. We did the Wash, which we've grabbed drinks at many a time, but that was a 6-bay car wash that we converted into 5 micro restaurants and a bar. Well, the city had never seen anything like that,
Yeah.
right? So that presented some challenges going through that process, and then it also presents challenges on the lending side and on the equity side, right? Because on the lending side, they are incredibly risk averse, right?
Mhm.
They want to do what has been done a million times
Right.
before. They want to see the next Dollar General. They want to see the next 3-tenant strip center. They want to see the next office building in Cool Springs. And so, a boutique hotel like what we're doing right now, that was a challenge to get financed because lenders don't like to take risk. On the equity side, we're constantly having to raise capital,
Yeah.
right? And so that detracts from what I feel I am best at, which is finding deals, getting creative, and executing on the project. But if I want to support my habit of doing commercial real estate projects, I got to keep raising capital. So those are kind of the challenges that I see on a day to day.
I mean, what happens though, raising capital, I can see how that's a challenge. For us, I know we became partnered up and clients and so forth. I know just from kind of word of mouth, but then watching what you did. And so, what is it like when you create you finish a project and now people recognize you for that? And even heck, that's where I met your granddad. That's got to be a great feeling. You're sitting
Right.
there at the Wash having lunch on a Saturday. It's packed, and here you are, a young guy, and you're getting to experience this with your granddad. I mean, that had to be a cool moment. I know it was for me just to meet him. I know he was excited. Your grandma was there, your mom was there, and here's the culmination of a lot of hard work. And heck, I think it got broken into that very morning.
Yeah, it
It was
did.
a crazy morning, and the show went on. But what what I'm saying is like it. Once you kind of get that project, I think people now know. Oh, the Wash.
That's
Well, I
right.
mean, it's kind of like you've created something. It's almost like an album you've put out. Like no one can ever take that away.
That's
It's
exactly
there.
it.
And so, what is that like? I think does that help when you're going to raise money? Like you can kind of point to, or people know things, and now that you've completed.
Yeah. No, it really does. I mean, that's the name of the game in commercial real estate. If you're going to do what I do, what we do, it's all about building that track record,
Mm.
right? And so the first 5 to 10 projects will always be your most difficult because you are doing something new, right? I mean, I actually kind of got spoiled on the first syndication I ever did. I raised capital from 2 guys for a $575,000 building that we bought, and I made 2 phone calls. Right. And I was like, oh, this is easy. This is going to be so easy. This is great. That's not the case.
Didn't last.
It didn't last. My next raise was 4 times that, and it was far more challenging. But yeah, I mean, it's all about building that track record. Once you've proven that you've done it before and you have data behind why it works,
Mm.
it's very easy to go raise capital again. If I wanted to do multifamily, I could go, which I've never done. I could go do that tomorrow.
Yeah.
Right. There's such a just again history with how those projects operate that you don't have to sell investors on why they should do this deal with you.
Yeah.
Right. They know, like, multifamily, pretty good investment. We're going to get decent returns. It's very formulaic and straightforward. So the more every project that we add to the list just adds to that credibility
Right.
as to why somebody should be with us.
So you mentioned syndication. For those who may not know what that means, talk about a little bit about what that means, and what kind of role that plays in kind of the projects you work on, and how that maybe brings in other investors that are just the common or new investor.
Yeah, so syndication is basically you just bring in a group of people together to invest in your deal. And
Could be anyone.
it could be anyone, right?
Your neighbors or friend or whatever.
Friends, family, strangers, doesn't really matter.
People that
There
want
are
to invest.
people that want to invest in real estate, but maybe don't want to spend $3 million to buy a hotel. Maybe they want to, it's fractional ownership of real estate, right? That's kind of the way that we do it. We do it through our network. And so, what we'll do is we'll bring those people in. We call them limited partners, which means that they don't really have a say in the day to day. Of course, they review the business plan, they review the property, and they either agree or don't agree, and hopefully join us. But after their equity contribution, they have no liability. So no matter what happens on the property, they don't have any risk of debt, right? I mean, if the project fails, it gets foreclosed on, which we've never had happen. And hopefully it never does happen, but they don't have any of that liability, right? I, as the general partner who has co-invested alongside them, because I always put the minimum investment into my projects, I, as the general partner, bear 100% of the risk. And so it's kind of up to me as the GP, is what we call it, general partner, to go and execute the business plan that the partners have approved when we first started the project. So that's kind of how it works. I mean, it's, you could bring a couple of friends in and just do a straight partnership, like a traditional LLC, without doing a syndication. But everybody has to have an active role. So that's the biggest difference in a syndication, is who's active and who's not active.
Yeah. I mean, do some people talk about a little bit like why syndication works with, the newer folks that may not know, how to invest. So, you're talking about something that, you can kind of group and pool money together, right? So, but you need an operator, right? So not all syndications are going to be the same. It's really dependent a lot upon a particular person, I would say, right? The operator, because otherwise, sounds like a good deal. You've got a slide deck. You're looking at these returns, but doesn't mean it's guaranteed to work out that way.
That's right.
So, I mean, everything could sound great, right? And so talk about that a little bit, because I mean, not every deal works out, right? I mean,
that's right.
And it's not saying necessarily yours, but like maybe something out there that doesn't work out. Talk about that. Like, how can something go wrong with an operator, and why is that important?
Yeah, I've seen plenty of deals go wrong. I mean, the operator, it's kind of like Shark Tank, right? Yes, the deal looks great on paper, right? Every deal is just on paper, but it really comes down to the team and how they execute, right? I mean, most of the sharks will invest specifically in the people that are pitching the business, not necessarily the business, because they believe in that person. And it's very similar on the syndication side. I mean, a bad team can take a great deal and make it fail. But a good team can take a bad deal and make it good. Right.
And it's good. I like that.
Yeah. I mean, it's all in the operations and the execution. And so, when you're investing in a syndication, you've got to know the operators very well. That's why the track record is so important, so that you know what they are capable of, because nobody really saw 2008 coming. Right. But there were people that still made money in 2008 based on how they handled and reacted. It's the old Mike Tyson saying, everybody's got a game plan until they get punched in the mouth.
That's right.
Right. And so how are you going to handle getting punched in the mouth?
Right.
Because it's going to happen. I mean, it's almost inevitable in every commercial real estate deal. Things are going to pop up, right, that you've just got to deal with, that you can't really account for.
It is almost like that lesson, that old cliche of with commercial real estate. It's almost like, the 10% is what happens to you is 90% of how you react to it.
That's exactly it.
Where you're dealing with codes or whatever. So, I mean, I know there's different asset classes, and you said something interesting the other day when I was listening to you speak to the Real Estate Investors Network, which Tyler is also, everyone knows him here in Nashville, the Real Estate Investors Network. He's a board member. So you were talking the other day, it's a room full of a couple hundred people. And I remember you saying something about, kind of pick your asset class and stick with that. Now, why is that important? Why not just kind of spread yourself out? But you don't do it that way, do you? You do it differently. You do it a certain way for a reason. And why is that?
I do. And that's because I spent 5 years as a commercial real estate broker before getting into it. And I think that's the biggest difference. I actually had a full-time job in commercial real estate. I got to experience office, retail, residential, industrial, hotels, everything, right? But when you're first getting into commercial real estate, you can't learn everything. Every asset class is different. and they all have their unique quirks, and not to mention the fact that your network will be totally different, right? I mean, the tenants that you're going to be going after for an office building are entirely different from tenants in a retail building. And so when you're first starting your investment path, I always recommend pick an asset class and just stick to it until you learn it really well. And then once you've got that down, then start looking at going into another one. And that's essentially what we did. I mean, I spent 5 years learning everything. And then, we decided, hey, I don't actually want to specialize in one particular product type. I want to specialize in a neighborhood and do everything within that neighborhood. So even though I don't niche down on office or niche down on hospitality, we did niche down into a neighborhood to where we could learn everything about that neighborhood possible so that we know exactly what needs to be delivered. And I think that is important no matter which way you take it. Maybe your niche is buying projects cash because you've got a network of doctors, right, and that allows you to move faster on projects. Whatever that niche can be, I always recommend finding something that you can just focus on that will help you become the best at that first.
And I grew up here like you, and did not grow up in East Nashville. Neither did you. But what is it about? Because when you're talking about, you did drill down on a particular area, a neighbor. That is what we're talking about. Is East Nashville, which,
That's right.
What, 2 or 3 years ago, it's mentioned on the front cover of GQ magazine. You're talking about the 5 spot and different places to go. But what is it about the East Side that makes us want to go there? I don't know. Like, I think I know, but it's almost like we're in a different city or something in a way. But
That's right.
It's groovy. It's got the great food. There's movement there. It seems like it's always not finished, but in a good way.
Right.
Like, you know what I mean? It's like there's always improvement going on and development and tear downs, and it looks so much better year after year after year. I mean, the whole East Side.
Yeah, no, it's really cool. I mean, to me, it's local. I think that's the biggest piece about it. I mean, we're in Cool Springs right now. Cool Springs is a very corporate type of area, right? I mean, it's outside of downtown Nashville. It is the highest concentration of headquarters, corporate
buildings.
headquarters.
We're on a 3rd, 4th floor right here.
Yeah, and it's nice. There's nothing wrong with that, right? I mean, Cool Springs is a great area. If you want to come shopping, you come to Cool Springs because it's got everything that you need. But the restaurants here, I think you can really tell the quality of a neighborhood's culture when you look at the restaurants and the bars. Because you've got a lot of chains here, whereas in East Nashville, it's mostly local.
It's almost all local.
It's almost all local, and I think that there's something really neat that helps create within a neighborhood. So one, it's local. I mean, I tell people, kind of like you mentioned, you feel like you're in a different city. When I moved back to Nashville, I ended up finding my way into East Nashville, and I've been in Nashville my whole life. But I like to tell people I feel like I moved to a different city when I moved to East Nashville because it's so different. Two, the parcel sizes over there are much smaller than in other parts of Nashville, and so it makes it very difficult for projects of scale, right? And so if you wanted to build a 150,000 square foot office building, it's almost impossible to assemble that much over there. Which again keeps it smaller and more local, kind of like Berry Hill, right? Like you look at Berry Hill, and it's tough for that to ever turn over into corporate. But third, it's on the wrong side of the river, which I wear as a badge of honor. I love that because the old guard of Nashville investment and development doesn't look there. And so, they're focused on Green Hills and Brentwood, Cool Springs, Franklin, the south side of downtown. So we don't have the competition. And I don't have to pay as much as, other developers would for this side of town.
So I hear they're building a new football stadium on the other side, on that side of the river too, right?
Yeah, it's proposed right now.
Next to the current one.
It looks really nice. I mean, the renderings are amazing. I would love for that to happen. You've got Oracle on that side of the river as well. That's just announced a 60-acre campus with 8,500 jobs. So once those projects get underway, it's the East Bank revitalization. It's going to blow up East Nashville. So. We're trying to buy as much as we can over there to try and keep it local, because when you start getting things like that, it's really good for the community, but it can also start to take away.
And what are some things you maybe could share with some folks that are out there that are more peer level that may be struggling right now or rethinking things, shifting gears, maybe not been through something quite like this, where rates are going up. So, what's going on out there with folks, and how can we encourage other investors right now with kind of rates have doubled and tripled? Is that affecting people out there in the decision making? And
Yeah.
it's making the deals. You got to look at more deals. The numbers aren't working. And do you see that sellers are kind of being still a little too overly optimistic, and we've got to wait for that to settle and a new reality to set in for them? You
Yeah, I
think?
mean that's exactly it. Interest rates have risen pretty dramatically over the past year, right? I mean, our environment in June compared to today in November is entirely different. And when you start talking about raising interest rates by 2 points, it makes a huge impact. I mean, I was looking through. I've got this impact on debt, or the impact of debt on commercial real estate calculator that I created. Just kind of messing around with it this morning to see, what a 5% interest rate would have gotten you on a cash on cash return for a specific deal compared to 7% today, and it was a nearly 50% difference on your cash on cash returns. It was pretty massive. And that's going to take a lot of people out of the market, right? And then you've got sellers that haven't adjusted their sale price,
Yeah.
because they haven't had to sit there long enough.
Yeah.
They're still waiting. Maybe they built their product at the top of the market, and they're still expecting a certain return, and it's going to take a little bit for them to realize that they're not going to be able to get that. So on the like my brokerage team does a lot of triple net and single tenant net lease deals across the country. And what we're seeing there is a lot of the buyers that would use debt can't. I mean, they just can't buy.
Yeah.
Because if you're buying a 5.5% cap rate Starbucks and you're having to pay a 7% interest rate, your cash flow's gone.
Right.
But our cash buyers are crushing it right now.
Yeah.
Because they're able to come in. We're still able to find good deals. You just got to sift through more of them. And, we've got a Take 5 oil for a client out of California, out in North Carolina. Now, Take 5 oil typically trades at a 5% cap rate, but we found a franchisee that had self-developed. So a very unique situation where they just need to get out, get the cash back so they can go build the next Take 5 and open up more Take 5s. Well, we ended up negotiating that up to a 6.25 cap. So 125 basis points spread from what those are typically trading at. So, and that's because we came in with an all cash offer with a very aggressive close.
Right. That's a great strategy. I mean, so it's kind of like on the retail side. I mean, there's going to be some realtors, lenders, investors get out of the business. And so it seems like it's just kind of going to affect a lot of, I wouldn't say frothy necessarily in Nashville, but it's definitely, you turn on a television, turn on cable, and there's probably a show that has somebody that's filming here for a flip, fix and flip. So it became pretty popular, and it's a pretty cool place to live. So the secret's out, it seems like, for sure. And I think that correct me if I'm wrong, but it seems like the collateral with damage from that, with everybody rushing into the market, especially here, is that you're gonna have some people get out. And which I think that's going to create opportunities, right? And
I think that's
market share.
I think that's a good
there's
thing.
opportunities in every market, right?
Exactly. I mean, I think it's a good thing. The people that are going to get knocked out are not the cream of the crop. Right. I mean, they're the people that either just got into it or they've never really gotten that good at it. And, you think about the reputation that can bring to real estate, to lending. When you've got people that aren't as good at it, the way that they talk to clients, they may not be as fully educated or whatever that ends up being, and they just set a bad tone.
Yeah.
And so these market corrections are actually really good for making sure that only the best survive.
Yeah.
And I think that that's better overall for consumers.
Yeah.
I just think that it's a good market correction to have. And also, kind of going back to interest rates, I mean, we're expecting those to start coming back down in the next 12 months. And we've got a lot of clients that are still moving forward on projects. A lot of developers are still moving forward on projects. And you're going to have to pay a little bit more in interest right now. But in the long run, it's not going to make a big difference. We were talking about my grandfather earlier. I was looking at a property that he owns over off of Trousdale. He bought it in 2002 for $310,000. And that property today is probably worth between $3 and $4 million.
Yeah.
So, do you think that he would have been upset if he had bought that property? I mean, he probably paid cash for it, but if he had bought that for $310,000 with a 10% interest rate back then, he still would be doing just fine. So it's really the people that have a short-term view
Yeah.
that could get burned.
Well, it's a great example. And I bet I'd be willing to bet your granddad would say something like, do you think interest rates are going to be this 10% forever? I mean, like if he's talking to someone today, I mean, he knows,
Yeah.
he can look back and see, and plus he had so many other cycles, and it's not always, that's one thing I've learned is whatever you're dealing with right now, whether it's great or whether, you just won the Super Bowl or you just got your ass kicked, it's not always going to be this way. And I think right now with rates being the way they are, I think you've got to realize that it's not always going to be this way. And you can always, you're not stuck with it forever, right? He could have refinanced that how many times between then and now, because rates have really been a lot lower than that. So it is true. And I think you do have other people getting into the market and maybe take a lower cap rate sometimes because they're looking for the tax advantage. They got to place their money somewhere. There's other reasons for people to do deals, just like people get divorced. And so they've got to sell a building. They've got to sell. So there's deals out there, right? You got to be, it's the relationships. I mean, you got to really cull guys, your relationships, your contacts, and really deepen those. I think less is more in a lot of ways. I mean, meaning, I don't know how you feel about it, but it seems like you kind of think the same way. But like, you have your core, and then but you go deeper with those until you're just trying to, you're not trying to be Walmart, right?
That's right. Yeah, I mean, look,
doesn't really work that way.
Yeah, it doesn't. I mean, and historically, if you average out real estate over the last 100 years, it increases at 3% a year. There's never been a time where real estate has gone down and stayed down, or continued to just go down and never come back in value. And you look at regions like the southeastern United States, you have such an influx of people moving here that there's only going to be more demand for retail and office and industrial, not to mention multifamily and single family housing. And so, that's why, I mean, I was at the Urban Land Institute, their emerging trends report this past week, which was fascinating to see. Nashville is the #1 market in the country to watch right now, still second year in a row. You know who was the #1 market to watch before that?
Austin.
San Francisco.
San Francisco, wow.
Which is crazy because San Francisco is massive compared to Nashville.
Oh, yeah.
Right. And so, Nashville beat out Austin, Raleigh, Durham, Denver, Colorado. But just because there's so many people moving here, all these lenders want to be here. All these investors and developers want to be here. And so despite interest rates, despite where the market's going, it's going to continue to go up.
Well, you bring up another good point. I mean, I mentioned Austin. I was at dinner with a group of high-level mortgage folks earlier in the week at Etch. Shout out to Etch, Deb Paquette, one of my, if not my favorite restaurant in Nashville. But they were talking about the property taxes in Austin for $1 million house was like $30,000 versus
more.
Here, maybe, I mean, I guess Davidson would be the most, maybe it'd be 8,000, something like that. And here in Williamson, maybe 5 or 6. So it's a massive difference. That's a huge difference and makes a big difference in the numbers. And so
it does.
That's, we have low taxes here. And I think that really kind of draws in people as well, right? I mean, property taxes, no income tax.
Yep, no state income tax. I mean, that's huge for all these corporations that are moving to Nashville, right? And
that's big money you're talking about.
That's big money.
I mean, saving.
I mean, Oracle bringing 8,500 jobs, and I'm pretty sure the average employee is making 6 figures there.
Yeah.
That's a lot of income that is going to be brought into the city. And, of course, we don't have state income tax, so that doesn't matter too much for the state. But what we do have is a higher sales tax, right? And Nashville is, one of the top destinations for tourism in the country and has been for years. And we get well over 50% of our sales tax in Davidson County comes from people that live outside of the county, which is huge for a city like that.
Who does it tell you? I mean, people are coming into the city.
Coming into Nashville.
That's right. I know we do. So
I mean, our hospitality market is only second, I think, behind Miami. Oh, wow. Which is wild to think about.
It really is. I mean, that was not the case.
No.
I mean, when you talk about, being in the burbs, and how you really don't have that so much of the indie restaurants and so forth. I mean, that's really what Nashville wasn't like that. I mean, so many years ago, 15 years ago. And then all of a sudden you got indie restaurants, and then they're indie like Husk. I mean, the guy that's
James Beard award-winning chefs.
Yeah, I mean, Husk comes in from over in South Carolina, and you just award-winning chefs. And so, talk about kind of like that's a good segue. The Salt Ranch, that's a passionate project, and then you've got the Wash, which is on the east side. Are those the kind of projects that you like? And what gets you excited the most?
Yeah,
it seems like the culinary piece is a little bit of it.
Yeah,
right?
I think there's something
Or the
special
food and fun.
I think there's something special that bars and restaurants can bring to a community. I mean, that's what drew me to East Nashville in the first place. I mean, we like the funkier projects, right? I mean, if we just wanted to make money, I'd go become a preferred developer for, not picking on Dollar General, but for someone like Dollar General, right? Who is expanding like crazy. And we just go find pieces of land, develop those, sell them on a cap rate, move on to the next one. But that's not fun to me.
Right.
I mean, a huge portion of this, this is a lifestyle business for me.
Yeah.
I live, work, and play within the neighborhoods that I'm developing. And so I want to build the things that I want to go to, right? I mean, the Wash, man, selfishly, I get to choose 6 concepts that I want to go to all the time, right? I mean,
and they're all great.
Yeah.
2 Peruvian chefs, soy cubano. What's up, guys?
Yeah. I mean, you want to eat there all the time.
Yeah.
And I enjoy that. It's a fun place to hang out. So, I mean, those are the kind of projects that we like to do. It's just something that's a little bit different. Maybe it's against the grain, but it's fun. It's exciting to work on. It gets us out of bed in the morning.
Yeah. I mean, and plus you can go enjoy it with your friends. That's the finished product. I mean,
take my grandparents
there. That's right. That's
right.
right.
That's cool. I could, if I was doing just a corporate office building, it wouldn't be as exciting.
Yeah. So this year, what do you see playing out locally and even, regionally? I'm not going to ask you nationally, but because you're in commercial real estate, but this is a different market. The South, there's definitely people are moving here from all over. You just look at the demographics and the graphic where it just shows people just moving into the South from all other areas of the country.
It's crazy.
So what is your outlook for 2023? Is this going to be a little bit of a flat kind of situation? What do you think is going to happen? I mean, as we move forward.
I think there's definitely going to be a bit of a slowdown with interest rates where they are. It's going to slow down construction, which means 2-3 years from now, we're going to have a lower supply, which is going to drive the market again.
Right.
So, what we're doing right now is we're trying to hit singles, right? I just want to find smaller projects that we can work on, sub $4 million that are within the neighborhoods that we like to just keep ourselves busy, right? I mean, and those are the most fun ones to work on anyway, because they're small. You can do really cool, unique things with them. But we're also looking at, some opportunistic deliveries.
Yeah.
So I'm under contract right now on a 144 unit hotel that we're going to convert into apartments, micro apartment living. Well, again, in 2 years, there will be fewer apartments delivered.
Yeah.
Over the next 12 months, there will be quite a bit. Then we'll have 12 months of absorption, and then there won't be any new product being delivered, or very little. And so to me, that's an opportunity. Maybe it costs us a little bit more right now, but our lease up on the back end should go really fast because we're not going to have as much competition.
And I think that's what, when you hear this saying of, millions are made in recessions and millionaires are made in recessions, millionaires make more money. It's really planning it out and playing the cards you're dealt. I mean, it's like a poker game, which, I'll play tonight. You gotta somehow play that hand that you've got. And maybe, like you said, I love the baseball analogy, hitting a single. I mean, sometimes you got to choke up the bat, when it's tight and, try not to swing for the fence. Right?
That's right. Yeah. I mean, if I've got a pair of sevens, I'm not going to go all in, but I'm going to ride it out and see how far I can get it.
Right.
You never know what that river's going to show.
That's right. Especially if they let you play. And the thing is, if you can play here, I mean, it's a great campus or playground here in Nashville. There's a lot to explore. There's a lot to take advantage of. What do you tell us about something you got coming up on the horizon that you're excited about without, sharing too much, but what's something that we're going to be excited to see or that you've got coming up maybe in the next 6, 12, 18 months that's going to be fun, or something that your hope is going to work out?
Yeah. I mean, we got that hotel to apartment I was telling you about. We're working on a second hotel right now. There would be kind of a boutique, Las Vegas style pool party theme.
Oh, yeah.
Which I'm pretty excited about because Salt Ranch is more of the mid-luxury boutique. This will be more of a mid-level hotel that kind of caters to tourism. And then so we're really excited to be working on that one right now. And then this past week I launched my course on investing in commercial real estate.
Congrats.
Yeah, I'm really, really excited about that. It's commercial real estate investing for beginners. We spent over a year putting that together because I wanted to make sure it was the most comprehensive course out there on how to buy commercial real estate.
How could people buy that if they wanted to take advantage of that and really start to gain some knowledge and get their real estate career going in commercial? How would they buy that? How would they access that?
Yeah, so you just go to tylercauble.com/course and it's right there.
Okay, so tylercauble.com/course.
That's it.
All right, cool. Well, man, one last question. Like, if you've been doing this for a while, you've been doing it since you're 12, but like, if you weren't in real estate, I mean, could you see yourself? Could you see yourself doing something else?
That's a really good question.
Like, if it paid you money, doesn't matter.
Yeah, pay me money. I mean, look, when I was a kid, I always wanted to be a rock star.
There you go.
I always thought that'd be so much fun. Just travel the world playing music.
What kind of music? I know. But
rock. Rock or heavy metal.
Heavy metal. That's right. Yeah. That's what I was getting at.
I think that'd be a lot of fun. Seth, one of the guys on my team, he is the bassist for a heavy metal band, and so they'll tour all over. They're trying to set up a European tour, and I just love that kind of stuff. I think it's so cool.
I think it's great, and maybe that's your kind of rocker mindset is kind of what comes out when you express yourself every day. So I think that's great. Guys, thanks so much. Tyler, thanks for being here. This brings us to the end of our time. If you want to reach out to Tyler, please do. He is always looking for investors. He's got projects going on for every level investor. And like I said, when you connect yourself with the right people, especially in the right people in the right towns, then good things are going to happen. And Tyler's one of those guys. And so we appreciate him having here today. And you guys have a great rest of the week, and we'll see you on the next one.